Have you ever wondered what decentralized finance, or DeFi, is? It's a term that's been buzzing in the financial world, and for good reason. DeFi stands for decentralized finance, a revolutionary concept that's turning the traditional financial system on its head. It's an innovative blend of finance and technology, reshaping the way we think about and interact with money. But what exactly is DeFi? What does it mean for you and the wider world of finance? Let's dive into the world of DeFi and unravel its mysteries. The roots of DeFi can be traced back to the Ethereum blockchain. This was the birthplace of what we now know as decentralized finance. Ethereum, unlike its predecessor Bitcoin, brought something new to the table: smart contracts. These programmable transactions, which execute automatically when certain conditions are met, kick-started the DeFi revolution. Ethereum's smart contracts opened up a world of possibilities, enabling developers to build applications on its blockchain. This was a game changer. It meant that financial services, traditionally controlled by institutions, could be decentralized. This decentralization is what birthed DeFi. The flexibility and adaptability of Ethereum's blockchain were key to this. Its open-source nature allowed developers to experiment, innovate, and create a whole new financial ecosystem. It was the perfect platform for DeFi's inception and growth, providing a foundation for services like lending platforms, decentralized exchanges, and automated market makers. Ethereum laid the foundation, and DeFi took flight. DeFi operates on fascinating mechanics that give it its unique edge. At the heart of DeFi are decentralized exchanges, or DEX. Unlike traditional exchanges, these platforms are not controlled by any central authority. Instead, they rely on smart contracts on the blockchain to facilitate trades directly between users. This means that you retain control of your crypto assets until the moment of the trade, adding an extra layer of security. When you want to exchange or trade traditional currency through centralized exchange or a bank, the bank already has assets that you want to trade between. Let's say you want to trade your dollars for euros. They have dollars and euros, and they can execute this trade for you very fast. But since there is no central authority on blockchain, decentralized exchanges rely on smart contracts and so-called automated market makers such as Uniswap. So let's say you deposit funds into a smart contract on DEX and submit a trade from Bitcoin to Ethereum. Automated market maker uses algorithms to determine the price of both assets in that moment, so you can get the exact correct quotes when trading that Bitcoin into Ethereum. But who holds these two assets if there is no central authority, such as bank? Where does the liquidity come from? These smart contracts hold so-called liquidity pools. Other users on the blockchain can lock their assets into those liquidity pools, so users can trade between those assets, and they earn commission on each trade. So in this case, other users sent their Bitcoin and Ethereum to the smart contract on that DEX. They loaned their assets. Now there is enough liquidity there is enough Bitcoin and Ethereum, so the smart contract can execute your trade instantly between those two assets. You pay a certain fee for that trade, and those users get the commission because they provided their assets, which made it possible for you to trade fast. Part of the fee you paid goes to those liquidity providers, and part goes to the DEX. Remember that DEXs are simply programs that use smart contracts which self-execute when certain predetermined conditions are arranged, so there is no central authority controlling anything. If you do not know what smart contract is, you can check our video here. Now we learned how we can trade using blockchain and DeFi without any middleman holding our money, such as bank. Another important point to mention is that here commission does not go to the central authority, such as bank. Commission of the trades goes to anyone who wants to provide liquidity. It is spread more democratically. Anyone can earn. Staking and loaning are other key components of DeFi. Users can stake their assets in a smart contract, earning rewards over time. Similarly, DeFi platforms offer loan services where users can borrow against their crypto assets, with the entire process being automated and trustless. The mechanics of DeFi make it a truly democratic and open financial system. Like any disruptive technology, DeFi has its pros and cons. Let's begin with the advantages. DeFi, short for decentralized finance, is highly accessible. With an internet connection and a digital wallet, anyone, anywhere, can participate in the DeFi ecosystem. This opens up a world of financial services to those who've been traditionally underserved by the banking sector. Next, transparency. DeFi applications are built on blockchain technology, which means all transactions are publicly verifiable. This level of transparency gives users a clear view of where their money is going and how it's being used. Lastly, the potential returns. DeFi often offers lucrative yield farming and staking opportunities that can significantly outperform traditional savings accounts. But remember, with great potential return comes great risk, which brings us to the disadvantages. The first one is risk. DeFi is still in its early stages, and while the potential returns can be high, so too can the losses. Users need to be aware of smart contract vulnerabilities, market volatility, and the risk of total loss. Regulatory uncertainty is another concern. The legal status of DeFi is still unclear in many jurisdictions, and users could potentially face legal repercussions. Lastly, the technical knowledge required. DeFi is not as user-friendly as traditional banking services. Understanding how to navigate the DeFi ecosystem requires a certain level of technical savvy. Despite its challenges, the potential of DeFi is too great to ignore. DeFi is a complex yet fascinating world that is reshaping our financial landscape. Today we've delved into its origins, rooted in Ethereum, and discussed the transformative mechanics it brings, like decentralized exchanges and automated market makers. We've considered the pros and cons, highlighting the game-changing impact of staking and loaning. Despite its complexities, DeFi is undeniably influencing how we interact with money. The world of DeFi is still evolving, and it's an exciting journey we're all a part of. Thank you for joining us on this exploration, and hope to see you in our next video.